Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a market update video for you. Going to try to make this one fairly short because not a lot has changed. So first off, let's take a look at the daily chart. This is actually over on Coinbase. The levels that I'm watching on the daily, I'm watching this 50 moving average. We had a break above it yesterday. We broke up to a little over 10.9. Right now the 50 moving average is at 10.789 and we're at 10.746. So the fact we're falling back underneath this is not a good sign for the bulls, right? They really need this to hold as support so that it can bounce off of it like it did back here where it retested it. Lots of time left in the day. There's about 6.5 hours left today, so who knows what's going to happen. But that is an important level I'm watching. Over on the 4-hour chart, I'm watching the 200 moving average, and it has acted as support today, so that's a great sign for the bulls. You can see here that we got two strong bounces off of it. So it seems to be trading a little bit of a range between this 10.5, 10.6 area and up around that 10.8 area, trying to decide which way it wants to go. So which way do I lean? Well, I lean bearish, of course. I'm still watching this potential head and shoulders pattern. It's not confirmed yet, right? This peak over here was actually up around 11.1, so I'm not going to be too concerned about price going up a little bit. I could go to 11.1, even 11.5, and that would still be a valid head and shoulders if it comes down and breaks this neckline. Up until it breaks the neckline, it's nothing but a squiggly line on a chart, okay? It only matters once it confirms. So that is a potential head and shoulders. And, just like I said 2 or 3 days ago, I said if price got up to 10.8, I'd be looking to go short. Well, I did short it, and I closed that position last night before bed for a small profit. The reason that I didn't stay in the position, the reason that it was a day trade instead of a swing trade, is because I knew that we were above that 200 moving average on the 4-hour. I knew that would very likely act as support, and at the very least, we get some type of dead cat bounce, and that's the reason I scalped it versus trying to hold it. Now, with that being said, I will be searching for a short setup if price can climb up to the 61.8 fib, right around this 11.232 area. As you know, if you've watched my past videos, this is what is called the golden ratio zone. This is where professional traders will often look to go short on a stock or an asset, or they will look to go long if it's in an uptrend and retracing from an uptrend. This is retracing from a downtrend. Okay, so we're in a downtrend, now we're retracing, and I believe what will happen is we'll go up here and then continue going down, if we even get that high. We actually got stopped right around the 50 fib already. Now here's what's interesting about this. If you know anything about the GAN principles or GAN principles, I need to figure out how to pronounce that guy's name. Really smart trader, invented a lot of different indicators and things like that. Okay, basically one of his rules is it will take an asset about 50% of the time to retrace to the 50 fib that it took to, for the entire move. Basically, in simplest terms, it means that however long it took to go down, it should take about 50% of that time to go back up 50%. So it took about 9 days to go down, and if we measure the move up, 4.5 days is what we should be looking for. This is a daily chart, so there's no halves, it's either 4 or 5. And you can see that we retraced 50% in 50% of the time. Pretty cool, right? Or close to 50%. So that's interesting. That could be our local top, and maybe we just go down from here. But also, I wouldn't be surprised if we go up, because again, we had that ascending triangle that broke yesterday morning that had a price target up around 11.5. So we could pump, and 11.5 would be right up in this area here, which is strong resistance over here, okay? We'll see how it goes. I will definitely be hunting for a short at 61.8. I would love to be able to get into a short that I could swing trade and just ride down from there, okay? So that's what I'm looking at on the 4-hour chart. On the 3-day chart, I'm still watching this other potential head and shoulders, okay? This one right here. It has not yet confirmed, right? This basically came down, but it didn't close under the neckline. Our neckline looks something like, well, I can't draw a very good line. Let me actually use the pattern so that way. So our neckline looks something like this. So what we need to do is not just break under it on a tail, but we actually need to close under that for that to be valid. Until then, it's just wishful thinking. So I'll be keeping an eye on that as well. And this is one with the target down around 4,400. Now, what I want to talk about something a little bit differently today. I want to talk about market psychology, okay? And basically, I want to show you something called the Wyckoff logic, okay? A lot of people might have heard of this, but maybe you don't understand what it actually means. So with Wyckoff, you basically have this accumulation phase. You have the markup, then you have distribution, and then you have the markdown. But I want to explain why this works the way it works, okay? Essentially what you get down here is accumulation. This is where the dumb money is capitulating. This is where they're actually selling at the bottom of the cycle, and the smart money is actually buying. Because you have a roughly equal number of people selling and a roughly equal number of people buying, you get this chop. You get consolidation, just sideways movement. Finally, there's enough momentum that it breaks free, and some of the dumb money starts coming back in, buying back the assets they sold, and the price pumps. Up here is where the smart money actually starts dumping their asset, liquidating their asset, and taking profits. Unfortunately for the dumb money, this is where the dumb money is getting the most excited, thinking that it's this new paradigm. We're going to all-time highs. This time is different, blah, 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 blah. And so what you have is, again, a period of equal buying and selling where the dumb money is buying, the smart money is selling. Eventually, there's not enough dumb money buying, and the price starts to go down, which is where it first starts to break south right here. There will be a little initial burst of excitement. Oh, I'm going to buy the dip. This is the next dip. So you'll have the price pump just a little bit. But very quickly, those retail investors will realize that this is not a dip, that it's actually going to be much worse. They start to panic. They start to sell. And you have the markdown effect, which is what you get over here. Now, this cycle repeats itself over and over and over again on multiple time frames. You'll often be able to find this on 5-minute charts, on hourly charts, on daily charts, weekly charts, etc. And I want you to take a look with open eyes at the Bitcoin chart and tell me what you see. Okay, this is a weekly chart. What did we have down here? We had chop. We had several months of sideways action. This is where the dumb money was capitulating, giving up on the market because they'd already lost 80-85% of their money. And this is where smart money was buying, so you had sideways action. Finally, like a rubber band pulled too tight, it broke free. The dumb money got excited. People that were selling down around 3,000, 3,500 started buying back in at 5,000, 6,000, and they created this pump, which is what's called the markup phase. Okay? After the pump up here, what do we have? We have sideways chop. What's happening up here? Is this a correction? No, this is not a correction in my opinion. This is the distribution phase. This is where the smart money is unloading their bags on the dumb money. Now I want you to stop and think about this for a second. You have really big investors, guys that are investing with hundreds of millions of dollars, like these hedge fund type of guys. And they're coming out and saying, man, I wish I'd have bought more at 10,000. Now, do you really think they wish they had bought more at 10,000? Or do you think they want you to start buying at 10,000? Stop and think about that, right? They're selling. They need lots of liquidity. They need lots of buyers to unload their hundreds of millions of dollars in coins, right? Or millions of dollars in coins, depending on the fund, okay? They need lots and lots of buyers. So they're going to come out and say it's a great buying opportunity, specifically so they can sell. So we're in the distribution phase, if you ask me, which is this phase up here. And what comes after the distribution phase is the markdown phase, which typically takes you back down to right around the start of the breakout, okay? You can see here that it's right around that first breakout where that typically retraces to. That'd be down around the $5,000, $6,000 area. Now I want you to keep that in the back of your mind, what that looks like, okay? And I want you to take a look at a 3 peaks and a domed house pattern that I posted up a week or 2 weeks back here. These are actually principles by 2 different traders. Wyckoff is one trader, or was one trader before he passed away, and this pattern was actually discovered by George Lindsay. But it's very, very similar. You get this market phase, you get this chop, and then you get this markdown phase, right? And then through here, well, it's not going to let me draw on the chart, but through this phase here, you have consolidation, right? Again, and what this is this is the next accumulation phase. This basically just repeats itself. You accumulate all over again, this time a little higher, and then price goes through a market phase where it goes up and makes new highs. Okay, so if this pattern plays out, we should consolidate down between like $5,200 and $7,500. Dumb money will be scared. They'll be thinking it's the next bear market. They'll be selling. Smart money will be accumulating, and the price will start to go up. Dumb money will buy back in, and this will just repeat itself like it's done many, many times in the past. So if you're wondering, James, why are you so bearish? Why has nothing changed your bias? It's because until we break out of that Wyckoff pattern, until we break out of that 3 peaks pattern, nothing will change my mind. Because even if this thing pumps up to 11.5 or 11.8, we have to get out of this distribution phase. We have to have a clean break out of this phase so that we can say, okay, we're actually in another markup phase, okay? But I don't think we're gonna have a markup phase out of this consolidation. I think we're gonna have a markdown phase because we haven't had one, right? There has been no markdown phase. People can say, oh, this is the correction. That was not the correction. That's not how it works. There was not enough consolidation, in my opinion, to make this a markdown phase. Also, if we go back and talk about that 50% rule, I want you to look at this. Our 50 fib is at $8,500. $8,500. So if we draw a timeline, it took us about 194 days to reach the top from the bottom. That means it should take us half the time to reach the 50% fib, which is going to be 32.5 bars. So we'll just say 32. So technically, if we go by the Gann principle or Gann principle, we should reach the 50 fib sometime in late September. And again, the 50 fib is actually at $8,500. That would be the point where I could say maybe we're done with the markdown phase, but I don't think so. Typically assets, and Bitcoin is no different, they will retrace to the 61.8 fib at least after a parabolic move, which again is the golden ratio. This is where professionals are going to be looking to accumulate more Bitcoin. Where does that fall? It falls between 54.31 and 72.35. Where does that line up with? It lines up perfectly with that area that I had drawn up on the 3 peaks pattern. It also lines up very nicely with how a markdown works, right above the old highs. See this? Old highs down here, right above that area. So this is where I am still looking to go long on Bitcoin. And when I say go long, I mean buy Bitcoin to hold for the next rally. Until then, everything I'm doing is swing trading and day trading and nothing else. I'm not buying anything to hold long term at these prices. I'm waiting for the markdown, or I'm waiting for a clear breakout above these levels where I can say, you know what, this time is different. But usually these times aren't different. If we look at a monthly chart, let me show you something real quick. Nothing that happened over the last couple of months was accidental. I don't know if anybody's even pointing this out. I don't know if anybody's paying attention to this. This was the monthly close. The highest monthly close in the history of Bitcoin was $13,863, right there. And if you look where our rally came up to in June, it came up and just touched that line. The high was actually 13,868. This close was 13,863. So all it did was come up and test the old highs, and then it failed. Okay, so it's going to be completely normal if this thing comes back down like this and then runs at it again. And I think next time, I think not only does it break through it next time, I think the next time it puts in a new high. And I mean a new all-time high. I think the next rally is going to be the one that breaks the all-time high, and I think it will be sometime in 2020, probably the summer of 2020 if I had to guess. You know, I really do. I am a long-term bull. I really believe in Bitcoin. I do think that we'll see something like this. If not something like this, maybe something like this right here. Okay, so I'm just waiting patiently, and you know, we'll see how it plays out. But the levels to watch today, like I said, you know, I would keep a close eye on that 50 moving average and see where we close. If we close above it, that's a pretty good sign that we probably will go up to at least 11.1, 11.2, maybe all the way up to 11.5. And you know, if we do close above it, I'll be searching for a long position on a shorter time frame. If we close below it, I will be interested in a short, but only if we close below it and we close below the 200 moving average on the 4 hour. I wouldn't want to try to short above the 200 MA. And I'll tell you why, because of the strong level of support, right? Shorting support, it's a really bad plan, okay? So we need to close under the 50 moving average on the daily and close under the 200 moving average on the 4 hour for me to really be like looking for a short position. All right. So I hope you guys enjoyed this video. If you did, please be sure and give it a thumbs up and subscribe to the channel. Don't forget that I am literally some guy sitting in a spare bedroom. I'm not a professional financial advisor. I'm not your financial advisor. Nothing in this video is financial advice. You should always do your own due diligence and seek out professional advice before making any type of investment. Also, don't forget you can check the description for links where you can follow me on TradingView, Twitter, and also join my free Facebook group. This is James with Crypto Common Sense. Have an awesome day. Trade safe.